Hello and welcome back to Crypto Republic. In this video, we'll be discussing the details of the SEC's lawsuits against two major cryptocurrency exchanges, Binance and Coinbase, and what this could mean for the future of the cryptocurrency industry. Part 1. The SEC's lawsuit against Binance. The U.S. Securities and Exchange Commission, SEC, has recently sued Binance, one of the largest cryptocurrency exchanges in the world. The SEC accuses Binance and its CEO Changpeng Zhao of operating a web of deception and misleading investors about Binance's ability to detect market manipulation. The SEC also alleges that Binance misused customer funds and sent some of that money to a company controlled by CZ. In a lawsuit filed in the U.S. District Court for the District of Columbia, the SEC accused Binance and its CEO Changpeng Zhao of misleading investors about Binance's ability to detect market manipulation, as well as of misusing customer funds and sending some of that money to a company controlled by CZ, among other charges. The SEC accuses Binance and Zhao of operating a web of deception. Binance has denounced the lawsuit, saying that the company has been actively cooperating with the investigation and worked hard to answer their questions and address their concerns. The company said it plans to defend our platform vigorously. Part 2. The SEC's lawsuit against Coinbase. The SEC has also sued Coinbase, another major cryptocurrency exchange. The regulator claims that since 2019, Coinbase has generated billions of dollars by operating as a middleman on crypto transactions while evading disclosure requirements meant to protect investors. In its complaint filed in Manhattan Federal Court, the SEC said Coinbase traded at least 13 crypto assets that are securities that should have been registered. The SEC's complaint alleges that Coinbase has since at least 2019 made billions of dollars by operating as a middleman on crypto transactions, while evading disclosure requirements meant to protect investors. The regulatory agency stated that Coinbase traded at least 13 crypto assets that are securities that should have been registered. Those assets include Solana's SOL token, Cardano's A-Day token, Protocol Labs Filecoin FIL token, Polkadot's DOT token, Polygon's MATIC token, Uniswap's UNI token, Chainlink's Link token, Aav's AAVE token, MakerDAO's MKR token, Compound's QMP token, YearnFinance's YFI token, Synthetix's SNX token, SushiSwap's TESUSHI token. These are the 13 crypto assets that the agency said Coinbase traded without registering as a broker, exchange, or clearing agency. The SEC said these assets are securities because they represent an investment contract, a share of a common enterprise, or a claim to profits from the efforts of others. The agency also said these assets are not exempt from registration because they are not utility tokens that have a consumptive use or function on a network. The SEC said these assets are subject to the federal securities laws and regulations that protect investors and ensure fair and orderly markets. Coinbase has responded by saying that the company will continue operating as usual and has demonstrated commitment to compliance. Part 3. The SEC's jurisdiction over cryptocurrencies. At the heart of these lawsuits is the question of the SEC's jurisdiction over cryptocurrencies. For the SEC to have jurisdiction, the cryptocurrency in question must constitute a security. Whether an asset constitutes an investment contract depends on a test laid out by the Supreme Court known as the Howey test. This test says that an investment contract is formed when there is an investment of money made in a common enterprise and the investor's expectation of profit is to be derived from efforts of others. The SEC has asserted that some digital assets and platforms are operating as or offering securities, which would bring them under the SEC's oversight. However, the debate hinges on the definition of whether cryptocurrencies and related stablecoins are legally defined as securities and are therefore subject to regulation by the SEC. These lawsuits could have major implications for the future of the cryptocurrency industry. If successful, they could transform the crypto market by successfully asserting the SEC's jurisdiction over the industry. We'll have to wait and see how these lawsuits play out in court. Thank you for watching. If you found this video informative, please like and subscribe for more content like this.